What it is, my folks, what it is, my people. I wanted to do another episode. This is a episode of the Suited Traders Playbook. Today I want to go over a trade that I took today, and I want to give you guys a breakdown of that trade, and I want you to see what my thought process was, why I took that trade, etc. So this video right here will be found in the Suited Trader Playbook, and this was from today where we took a trade for a one, two, I believe I took my TP right here. I did equal low, but what was it? Yeah, somewhere within these range, I believe. But this overall target that we were aiming for is the Asia low. But let's get to it. Let's get straight to it. So first and foremost, on a daily time frame, let me delete all this. On a daily time frame, I noticed that we were inside of this previous day, um, previous day order block. This high that led to this low that broke structure, and I saw prices revisiting this zone once again. Okay, cool. Let's see what that tells us. So far, I can see that price was on a bearish trend. I know I had this reveal of market intent here, where price gave me this main push, this reveal of market intent, because it led to a break of structure of the previous high. This previous higher high was broken by this new higher high from this lower high. I'm sorry, from this higher low. Uh, so now I went down to the 1 hour quickly just to see what the 1 hour was telling me. So on the 1 hour, I saw that we had it was about 61-minute order block, this demand here, that was shortly underneath this Asia low that price retested during Asia. Now I could see that we've been having this series of break of structure right here. We've just had these bearish BOS, just bearish breaks of structure to the downside. This was since last week. So instinctively, I can see that, okay, pro trend is sells because the market is just bearish for one, it's very clear. And for two, it looks like from the last low, which is this here low, from the last low, this low that led to this high, breaking above this high, all I could see is that price has not retraced back to a equilibrium, a discount level. So quickly I'll show you. So when I saw that, I'm like, okay, so I see that we could still be bearish a little bit more. So when I checked and I saw that at this point, price hadn't created this move down yet to sell, we were just floating around this 0.5%, 50% range. We haven't gotten deeper or even into this um discount level right here. So I'm like, okay, perhaps there's more levels to be fulfilled. So I went ahead and to my 15-minute to see, okay, what has happened during the session? What has London done? What has Asia done? I want to read to see what's going on. First thing first, I noticed the most recent price action. What was the most recent breakup structure? I could see it was here. We've had this bearish BOS where I had this high here that led to this low here, breaking underneath this structure. This was the last breakup structure coming from this high that led to this low breaking this structure. So I can see BOS, 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 a lot of breaker structure straight down. And I see price came to this high time frame demand and mitigated it after this breakup structure. Now, I do see that when price, after breaking this structure here, this reveal of market intent, this first confirmation of reveal of market intent, price tried to confirm phase two, the retracement, but it did not reach this demand, this supply. Instead, price dropped from here. Price reached the imbalance, the fair value gap in between it, and dropped and caused this next break of structure, and then mitigated this 61-minute demand that we see here. So, and I said, okay, but this demand mitigation happened in Asia, so it's not significant in my eyes because it did not happen during a kill zone, during a key time window of 3 a.m. London or 9 a.m. New York. It didn't happen during those times. So I'm like, okay, perhaps this is still liquidity. So when price reacted from this zone and came and mitigated the supply, and this happened during London session at about 3:45, 4 a.m. Price mitigated this zone. The institutions dumped the market. They pushed the market to the downside, causing another break of structure internally, letting me know that this high is respected. This is the same high that's coming from this overall high time frame demand from the daily that we identified. This was the revisit. And we can see since the revisit, price has just been breaking structure to the downside. So I'm keeping up with pro trend. What is the market telling me? That this daily zone, it still has some strength to it. Before buys happen, we probably are still pushing lower towards the discount level. So in that case, I asked myself, well, if London respected this high and pushed down, gave me a break of structure, now that price reached this demand, which was created during Asia, it's a 15-minute demand that was created at the Asia low. Asia low wasn't taken, Asia high was taken, and we're bearish. So the odds are price is looking to target this Asia low versus this Asia high. Because I can see this Asia high has been left since last week. Since last week, Tuesday, this Asia high was available and it was never taken, and we've been breaking structure away from it to the downside. So that lets me know that the market is still interested in the lows of Asia and not necessarily the highs of Asia. Okay, so that for me was enough to say, well, let me position myself for what would be pro trend, which would be a sell. So I said, let me go into my closer to the time window. Let's see what's happening. So when price reacted from this demand that was created at the bottom of Asia, this was at 6:10 after the key time window of London opened. So London is going to lunch at this point. It's about 12 o'clock or noon in London. So now it's lunch break. So there's not a lot of volume. So price invited these early buyers in, came back, retested them, did an inducement, and invited more buyers in, started to give us some liquidity buildup. What levels of liquidity was I seeing? That's the first thing I asked myself. What level of liquidity do I see coming into my session? This dotted line right here represents my, let me make it bigger. This dotted line represents my key time window of the session. Okay, and this other dotted line represent the kill time, the kill zone of my session, the closing of it. So I'm looking at, okay, what liquidity is being generated here right in front of me? First thing first, this is what I noticed. This now I went down to the 1 minute because price, I came into the market, it is 9 a.m. Now I want to see with my eyes open what is happening in front of me. First thing first, I see equal lows. Price left equal lows here. That's liquidity. I'm like, okay. I see another level of equal lows. Now, market at this point, it's 9 a.m. I see this reaction. I see price did this low. It did a build up right here, caused an inducement. Let me get my tools. Price did a slight inducement of these lows right here. And this inducement pushed out, breaking above this high. I'm like, okay. Price confirmed that there's some strength here. And then at 9 a.m., once the market opened, price mitigated this zone at 9:08 and flew up from here. I'm like, okay, if this is going to be the zone that price is leaving from, I said, I want to see, was this even a premium or discount level? So from this low that led to this overall high, I wanted to see. And it looks like price didn't even get to 50% of that range. That wasn't even 50%. So I said to myself, I know this level won't hold, especially because it created equal lows underneath it. Price will need to come back. If it's a true buy, if this level is to be a buy, we're in a buy trend, price will need to come back to this here level and react from here, because this is where price is in a discount from here. Even if you did it from here to here, price is in that discount. And if you do from here to the all the way to the higher side, then it would say, okay, price discount is somewhere within here. But we've already counted this out because from this range, this trading range from this low to this high that it reached that broke this structure, we know that this level was not within a discount range. So I said, okay, but now if prices to come here, there's equal lows underneath it. There's liquidity around that zone. So I knew that this was going to be a trap. So I marked it as an early buyer trap. I'll put it in the center. So I said, okay, this is my early buyer trap, my EBT. I know that price is going to invite buyers here to believe that this is going to be the zone to push up from. So I said, okay, let's watch what price action do. So price moved, came in, gave me this unintentional movement right here. of liquidity. Whenever I see these levels of higher, higher, higher lows so close to each other like this, small little internal higher highs, higher lows, I circle it because I know it's liquidity. This is more likely to be liquidity. The same way you see these lower high, lower low, lower high, lower low, so close. What did price do? Price swept them one more time before finally dumping. So just food for thought. So now, when price came in here, I see, okay, we've finally now reached this supply that we failed to reach during London, and we dumped from there. So now we finally came back into it. I wanted to see if price fails this zone, that will confirm my buy for me to say, okay, I'll take this buy regardless of this equal high, because price can take this equal high, equal low, I'm sorry, these equal lows. Price can sweep this equal low and have enough volume and liquidity to be able to push up from here if we break above this zone, if we disrespect this high that led to this low. So I wanted to wait and watch, and I see price came in, gave me a slight consolidation. So what did I do? I went ahead and I marked out the consolidation. As you can see, I marked out the liquidity of it, the trend line. Price was building this trend line. What happened from there? Price did a sweep of the lows to give me a change of character. This was the low. The reason it's a change of character is because this was the low that led to this high that broke above this structure. This is now the high that led to this low that broke under this structure. That's why it became a change of character. I said, okay. Now, I'm seeing two of my entry models now. I see, for one, I'm coming from a high time frame supply. So if I go ahead and pull out my trade criterias, we will see, let's annotate something we've seen before, my trade confluences. We know that part of it is time-based. We know we're within 9 o'clock. Second is after a high time frame supply demand. We've mitigated this high time frame supply right here. Price came back to the zone after we've mitigated this high time frame supply. And lastly is a change of character, break of structure, or a two-leg protocol. So we ended up getting both in this case. So the first was the two-leg protocol is what I first noticed. So what did I see? This high led to this low. That's one leg. Let's mark that out so that you guys can have a better clear view of these two legs and what that looks like. Where's my rectangle tool? For some reason, I don't know what happened to my toolbox. It's like it just disappeared. Literally, guys, it disappeared and I don't know what happened to it. There's a section where I had favorites and I don't know where it went. Okay, you know what? Let's just use the highlighter tool for the sake of time. Oh, there you go, rectangle. Cool. So now this is leg one right here. This is the first leg, okay? And I'm gonna switch the color of it. This is the first leg right here. This right here is the first leg. This from this high to this low is leg one. This is the second leg. Price retraced. Second leg started from here and ended right here to the bottom of this one. Second leg. So how that looks is this way. It's like this. When you're looking for that two-leg protocol, how that look is, I repeat right here. You've got one leg. You don't count the retracement as a leg. The retracement is like when you're walking, your knees going up, and then you step down. That's just basically your knee going up. So this is price stepping down, the knees going up, stepping down again, two leg. The second leg must break the structure of the low of the first leg. The first leg low ended here. The low of the first leg ended here. So the low of the second leg needs to break under the first leg for it to be a second leg. So if it stops legs, say for example, it went up here and it came and it stopped right here at this zone, this is not a two leg. Price is still respecting this leg. Once it breaks a body, see right now, this was a wick. It's not a two leg yet. When the body gets closed, once you can't see wicks, for example, you see wicks, to underneath it was wicks. Finally, you got the body from these two candles. That's when it was confirmed that you had a two leg. So once I identified I had a two leg, I was able to position myself for the sell. Where I entered from was this order block here. This order block covering the overall highs, giving myself a 5.7 pip stop loss. Price came back in after the two leg, mitigated me into the trade, left an equal high. At that point, I'm like, I don't know if I'm out the gutter yet, because if price pushes down from here, this equal high might get me in trouble. So price, instead of, before it pushes down, it came up and induced my equal highs. So once my equal highs were induced, I felt more confident that we were now gone, because that inducement right here led to a push down that caused a break of structure. Once I got the confirmation of a break of structure, we had now change of character, break of structure, which is what we have here as number 3. Change of character or two-legged protocol slash, change of character, break of structure, or two-leg protocol slash impulse candle. Even the impulse candle was present in this trade, actually. If you go to the, I believe, 5-minute, you will see that price left the impulse candle. Was it 3-minute? Yes, 3-minute. You will see that you had this impulse candle here. This was the impulse candle, and the candle before it was your entry right here. But price induced above it simply because of the liquidity that was left above the equal highs. So that's why I didn't even bother to wait for that type of entry. I took the trade from the impulse candle. I'm sorry, from the two-leg protocol. But then if you would have had your change of character and break of structure, and you wanted to get that confirmation entry, this was your opportunity. And you know what we look for when it comes to liquidity to target? As you can see, we look for smart money traps, line of liquidity, so fair value gaps, imbalances, etc. And we want to be aligned with the fib tool. So we understood we had this smart money trap because this was the one that gave the false reaction. I've told you guys before, smart money traps has to go sweep liquidity. So for price to give these invitation in, and actually for those buyers to believe it, it has to pull them in, give them straight, strong, bullish momentum candles where they're like, oh yeah, their TP is not to here. They're targeting way above because they're thinking bullish. What they're seeing is that price came from this zone, changed character, broke structure, and it came here. It's now time to retrace and push out. But what they failed to realize was invalidation model. We mitigated the supply before this demand, first of all. And secondly, price gave you a change of character, break of structure, a sell entry model. And third of all, we've been bearish the entire trend. The pro trend is sells. So they've missed that. They thought this was the end of the sell because Asia low wasn't taken. Price all of a sudden is only going to be bullish. And that's why they fell short. So I ended up taking this position here, and price came down, invited those buyers in, put us back into drawdown. In that moment, I was a little curious to see what price was going to do because I knew that I had covered these overall highs, what looks like equal highs as well. I knew that price was not looking to intending to take this out, especially after breaking structure to the downside. The most I could expect because of a smart money trap is there will be some sort of an inducement. So I waited. After price induced these levels, I received nothing but bearish candles. I believe it took 2 candles on a 5-minute and they were dumped. And I was right back where I was waiting for price, which is the equal lows going to this early buyer's trap as well, targeting the remainder of these equal lows and Asia low. And why was Asia low the final destination is because price is bearish. And in a bearish market, the price is not necessarily looking to target the highs of Asia. You know, it was targeting the low of Asia. This was the next level of liquidity to target. And on top of that, we spoke about we have not reached the discount range yet from the higher time frame. From that 1 hour or 4 hour, we could see this reveal of market intent. We're still retracing and we haven't reached a level of discount. We've now finally have reached 50%, which yes, price could leave from here now and continue to make a bullish push, or we can simply be on phase 2, which is the confirmation of retracement, phase 2 of the market phases, and we're simply retracing to where? It could be anywhere from any of these supplies. Price could easily be pushing back up to a 15-minute supply like this. Price could be pushing back up to this to just to retest it and then to continue down again. So anyway, it could be possible, or price could simply just go through it and continue bullish. And this becomes the new direction now because we've reached the 50% level. So either way it goes, it's important to know the market phases, the 4 phases of the market. That's why I've made it very clear. Once you get your reveal of market intent, know what's the next phase. Phase 2, the confirmation of the retracement. If the confirmation of the retracement is completed, i.e. like how it was here from this reveal of market intent, is completed, all you need to do is now position yourself for the repeat, because phase 1 was here, phase 2 is here, phase 3 was completed here. Now phase 4, which is repeat, is price giving you an entry model, and you sell down to take the next leg. And that's it. So this was a clear path of this session that allowed me to catch the sell. Granted, I could go a little bit in depth as to what happened here, why I marked some of these build-up inducements. I wanted to see what if price was going to leave from here first. This was all Sunday markings. But by the time we came in today's session and I saw price reacted from these supplies, these high time frame supplies, these 15-minute levels, and they were leading to breaks of structure, that to me was enough to let me know that price was still trying to go bullish. As you can see, this high that led to this low broke structure. Price did not close a body above it. It was a wick. So that lets me know that this level also was going to be respected, same as this level and these levels. So without further ado, I hope you got a little bit of understanding and value from this breakdown. And this was another opportunity into the Suited Trader Playbook. Peace.